Ladies and gents, welcome back to another video where I share a very powerful strategy that will change your results, that will change and improve your trades, especially with V75, V25 and V10, as I have tested it on these indices so far. Just before that, I would like to take this moment to appreciate you guys. Wow, what can I say? We are at 300 subscribers. Thank you for the love. This channel has been getting so much love lately, and we are still growing. I just want to tell you that it's all you. It's all you. I am really blown away. It's what gives me strength to create these videos for you guys. Thank you so much. Back to the video, I'm going to be showing you how I caught this V10 trade using the same technique that I am going to be sharing you in just a moment. And also this trade that I caught on V25 using the same technique. So we're going to be having both scenario, a sell scenario and a buy scenario. So sit back, relax and enjoy.
Oh my God! Wow!
Alright, so the strategy itself is divided into two parts. The first part is the technical analysis part of it, and the second part is the indicator, which are both very simple. Now for the first part, which is the technical analysis or the price action bit, it's very simple. We only require to know two things. The first thing is the current trend of the market, whether the market is on a downtrend or an uptrend. Then after we know that, the second part of the price action will be to know the current phase of the market. As we know, the market moves in two phases or three phases. The first phase is the impulse move. The second phase is the correction move. So we have to know whether the market is on an impulse move or the correction move. And for this particular strategy, we always take our entries, we always catch the impulsive move. So if it's a downtrend, we always try to take our trades at the peak top of an impulsive move, and if it's an uptrend, we always want to take our trades at the peak bottom of our impulsive move. Okay, so now let's move to the real chart so that I can show you what I saw before I took my trades. And for this is volatility 25 index, and as you can see, we first identify the current trend of the market, whether the market is on the downtrend or an uptrend. And as you can see, the market was on a downtrend, but it broke a structure, and it has now shifted into an uptrend. And by the way, this is the 15 minutes time frame. This strategy works in all time frames, but I prefer to use this on the 15 minutes time frame because it's there are a lot of setups that you can get within a week or within a day, as opposed to, like, say, a 4 hours time frame or a 1 hour time frame. So on the charts, we can see that the market broke the trend line and went ahead and breached a resistance zone, which now that suggests that the market has now shifted from a downtrend to an uptrend, because we have a lower high that was breached, and now the market went ahead to make a new higher high, and price is now making a series of higher highs and higher lows, as you can evidently see on the market. And that's where I found the market at before I took my entries or my trades on volatility 25. So the first step is done, as we have already identified that the market is now on an uptrend. And on the second stage, which is now to identify the current phase, we can see that the market had made an impulsive move towards the upside, and that's where I'd found the market right there. And the market was making a retracement down, and right at the top was the peak of that impulsive move that the market had made. So now that we have identified that the market is on its correction move, there is an important tool that we must use before we move on to the indicator part of this strategy. And that tool is the Fibonacci tool, where we draw it from the bottom of the impulsive move to the peak of the impulsive move, and we mark our Fibonacci gold zone, which is the 61.8 point mark to the 59 to the 79 Fibonacci retracement mark. Now, from my back testing, the market, especially with volatility indices, the market always retraces from the 61.8 mark to the 79 mark. Sometimes it might exceed, but that's why we need the indicator to know exactly where the market is going to turn, and that's when we use the indicator to know for sure. And now the indicator part is the easiest bit of all. Don't worry, I'll give you the settings to this RSI signal indicator. You might also call it a TDI indicator. I'll give you the settings after I am done explaining how it works and how we use it with this strategy. So before you concentrate on the RSI indicator, make sure the market has made a retracement to your Fibonacci gold zone. That is the first requirement of this strategy. So the purpose of this indicator, of this RSI indicator, is to give us a signal of when to enter the market after the market has retraced back to our Fibonacci gold zone. But also on top of that, it helps us identify a hidden divergence, which we also use with this strategy. So in the case of our setup here, we first mark the lowest point of our impulse move, and we also mark a corresponding part on the RSI indicator to make a match of those points, as you can see on the chart right there. That is the first thing you do. Now the second thing, on the RSI indicator, right where the vertical line passes, you mark the bottom part. You mark the bottom part by drawing a horizontal line, like I have shown you right there on the screen, as you can see on the screen, marked by the red line. Now here is where you have to pay attention. Your first check is that the market has retraced back to your Fibonacci gold zone. The second check, you have to make sure that the green moving average on the RSI indicator has moved outside of the blue bands that you can see. Yeah. The second check is that you have to make sure that the green moving average has moved out of the bands, the blue bands that you can see, before you can consider making any decisions. The third check is that you have to make sure that after the green moving average has moved out of the blue bands, you have to make sure that the same green moving average has crossed below your red line. That is the red horizontal line that you have drawn on your RSI indicator. And the last check, you have to make sure that you have a hidden divergence on the RSI indicator. In our case here, on the main chart, you can see that the price is making a higher low on the main chart, but on the RSI indicator, price is making a lower low. So that is what we call a hidden divergence. Now, up until that point, you have all the requirements to take your trades. Now, for entries, you can wait until the green moving average has moved back into the band and crossed the red line, the red moving average, to take your entries. And that is exactly what I did, as you can see on the right screen right there. That was our buy scenario. Now on to our sell scenario on volatility 10, V10. You can see that we have all the requirements met right there. First, we have price retracing back to our Fibonacci gold zone. Then second, we have the green moving average moving outside of the band. Then third, we have the green moving average crossing above the red line. And fourth, you can see we have our hidden divergence as we saw on the sell scenario. And what did price do after that? It went straight down. And as you can see on the left, that's how we took our sell trade, which respected our conditions and went ahead to fall down. So that's it for the video. Please like, share and subscribe if you found this information to be useful. Otherwise, I'll see you on the next video. I wish you a great day.